entry details. Now, I know that a lot of you in the last video were looking at these zones and these areas, and perhaps you started to, plot them on your own chart just so that you can get into the swing of things and see how it feels. And that's excellent. That's amazing. But now we want to find out how to use this information for us to profit from it, or from us to find the best way for us to enter into the market, so that we know exactly what it is that we're doing when we see the illusion and the wick filler pairs. So here's what we're going to do. We're going to do some top-down analysis, but I'm only going to do it we're only going to do it for this section over here, the section around here where we're currently are, and that's for the week that we're in right now. So we're going to do just some simple top-down analysis, and then I'm going to show you how I use this information to enter my trade. So let's hop on the weekly time frame. And again, guys, this is what I do over and over and over and over and over, and as you continue to do it, you'll start to notice patterns as well too. Okay, so so here we go. So let's remove this. Okay, let's remove this, and I'm gonna go to my cross icon. So remember, I told you guys that these big dogs are like round numbers, right? So like 100, 150, 200, 250, and stuff like that. So if we were to come over here and we were to plot our line, we're looking at 37,500, 37,500, right? So that kind of round number. And remember, we're focusing on this candle here. We're focusing on this one here and on this one over here. Okay, sorry, we're focusing on this candle here, but we're focusing on the top and the bottom. I'm sorry. So let's go over here, and so now we're looking at about, let's say 135 200. Let's say 135 200. Okay, so this was the weekly high and the weekly low. Now what do we do next? We draw the midpoint. So from here over here, this is our area for our midpoint. Look at that. We're already in a zone where we have this plotted out. You guys notice that? We're already in that zone right over here where we have that plotted out. Okay, so let me go here, and this shows that things are already lining up. Okay, perfect. So now what we want to do is we want to skip the daily time frame. Okay, so we go from the weekly, and I go straight to the daily, to the 4-hour time frame. So we skip the daily. Let me repeat that. We go from the weekly, we skip the daily, and we go to the 4-hour time frame. This is what I do. So I'm going to the 4-hour time frame, and I'm interested in this area right here from the 18th of January. Go to the 4-hour time frame. On the 4-hour time frame, I'm going around here in this area here to the 18th of January. This is where the week started, right over here. Okay, great. So right over here. So this is the 18th of January, right around here. And then, as you can see, we have our zones filled in this area. So what do we want to do? We want to go ahead and draw another midpoint. Okay, and the reason why, again, guys, we're trading from midpoint to midpoint because we want to secure profits. Okay, it's not a matter of having a whole bunch of lines on our chart, because we can always just use a small box to chart out these zones. But the only reason that we're having these midpoints is because we realize that the market doesn't normally go from one point here and just all the way down. It doesn't really work like that. It's kind of rare. You would normally have a move here, and then it would stop midways, and then it would do a little consolidation, maybe an illusion, and then it will continue to go down, and then it will go ahead and reverse and do what it has to do. So that's one of the main reasons why we have these midpoints. So from here, we come all the way down here into this area right here. Boom, and now we draw this area here. Again, look, it's perfectly lining up with our danger zones that we called them in the previous video, right? Okay, great. So here we go. We have this information here. So now that we have these areas, this is the only area that I'm going to be interested in, the only area I'm going to be focused on. So here's what we'll do. So let's say let's just say we're over here somewhere, right? And we are looking for an entry. Now remember, I told you that we are focusing on 3 candles, right? So the 3 candles that we're going to focus on would be 2100, 0,100, and then 0,500. And the reason why is because this will be our investigation candle, the 2100 candle, and then the 0,100 candle on the 4-hour candle is what we're going to be interested in, because we're trading pre-London and then London open. And then this candle here would continue to be our runner candle, so to speak. Or if we don't get a trade on the 0,100 candle, we can go ahead and get a trade on the 0,500 candle before New York opens up. So I hope that makes sense. So what we're gonna do now is we're gonna look at these candles over here. So this zone would have not been created if we started here. So this zone would have been created on this day, on the 21st of January. Okay, so we have this zone over here. So we now have this created. So let's just say our candle that we're looking at now would be 2100. Okay, so let's go over here. So this is our 2100 candle. This is what we're interested in. So remember now, I had told you guys in the previous video that a lot of times we don't get, not a lot of times, sometimes we don't get the illusion. And so notice this is one of those situations right here where we didn't really get an illusion. So we had the price that was coming down. This was the investigation candle. We have a wick fill right over here, right? So we have a wick fill because the price came down, but we don't have that illusion, right? The illusion is, you know, it seems as the price is going up and then it's going to continue on its way down. We don't have that. So in a situation like this, it would be very difficult for us to say, I want to enter the trade right now, because we'll just get a whole bunch of movement going down. But is there a way that we can look and say, if price continues to go down, I may be able to catch it? Yes, there is. There is a way. And how do we do that? Well, we go to a lower time frame, okay? So ideal situation is having the illusion and then we go down, but sometimes we don't have the illusion. So what do? So here we go. We notice that this right here is a danger zone, and so more than likely the price is going to respect this and keep going down. So we skip the 1 hour time frame and we hop on the 30-minute. Okay, so remember, we were on the weekly, we skipped and we did our chart, we skipped the daily, we went to the 4 hour, we drew our midpoint, and then we went to the 30-minute time frame. Okay, so we're on the 30-minute time frame, and the date we're looking at is the 21st of January at 0500, 0900. Okay, that's the area that we're in. So 21st of January. Okay, so right around here. So right around here, 21st of January, around 0. Okay, so here it is. We have our zone, and now we're going, and then we're looking for the 2100 area. Okay, great. So here we go. We have the 2100 area. So remember now, this right here, guys, is our midpoint. Okay, this is our midpoint area that we're interested in. This being our midpoint, what we're looking for is for the 0,100 candles to form. So 0,100. Okay, so let me pull out the cross icon. So 0,100. Right here is our 0,100 candle. What we would be interested in is for the price to break below here and then the price to go up. But because we have this information in advance, we already noticed that that didn't happen. So this right here is just for educational purposes, because we already know the information. So we already know that we don't have where the price went back up, but price went all the way down. But the question was, is there a way that we can catch this move? And so the answer is yes. So you can catch this move, but you would have to catch this move based off of this area right here, the midpoint, right? So this right here, which is our midpoint area, right? So all of this would have already been done. And so we would have to look at the previous zone or the previous structure. So the previous structure would be right here, right around here. Okay, this would be the previous structure. You extend this to the right, and this would be the previous structure. Now again, to me, this is more of a dangerous trade, because what I like to do is I like to see the price break and then it goes up on the lower time frame, and that gives us the illusion, and then it continues to go back down. or some people say the break and the retest, then it goes back down, and that's fine. But if you wanted to catch this trade, if you were pretty aggressive, you would probably draw this zone right here, wait for the price to break this area right here, and then you would continue to move on down and take your profit as it goes. So that's one way you'd be able to catch it, and then have your stop loss. So if you were to go in a short position and you were going right around here, you would have your stop loss somewhere around this area, and your maximum target would be around here, and then you'd be taking profits during these zones here. So this zone here, you take your profit. This zone here, you'd go ahead and take your profit, and then maybe even this zone here, this is a smaller zone, but maybe even this zone here, you take your profit, or you would just wait for this zone right over here to take your profit. Okay, and when I say take profit, I'm just talking about moving your stop loss up and closing some positions. So this would have been one of those times where you had your stop loss somewhere around here, so 15 pips, and this would have been a 3-to-1 trade, or like I said, 3.57. So you're risking 15 pips to gain ultimately 54 pips, but you may end up with 38 pips, 30 pips, or 16 pips. So this right here would be like your 1-to-1 trade, and then you'd go ahead and secure profit. So that's one way that you can do it. All right, now let's look at our ideal situation. Our ideal situation. So okay, ideally we want to look for on a lower time frame for us to have that illusion, and then for the price to continue to go down. So let's go to, this is what, the 22nd. Let's go to the 23rd. Let's see, 22nd, 23rd. Okay, great. So right over here would be the 22nd, 23rd. This is 2100. And then oh, I see what I did. Okay, I see why this was wrong. So we went here, price went all the way down here, and then we're going over, okay, gotcha, 24th. So 2100. So this right here is our candle, right? So this right here is our candle. So right over here is 0100. This is the area that we're interested in. This is when we start to analyze. So 0100. Now let's hop back on the 4-hour time frame. Let's hop back on the 4-hour time frame, and let's look to see where our line is. All right, okay, here we go. So right over here on this time frame right here, this, I'm sorry, not this, right over here, I'm sorry, this is the not this one. This is the one here we're interested in. Okay, so if you look right over here, again, you have a situation where this candle closed bullish. Okay, so from here going all the way up here, this candle closed bullish. This candle closed above this. So in a situation like this, is like, oh wow, well, what do we do in a situation like this? This is closing bullish, and so is there any trading opportunities for us? So it broke this area, and we're expecting for the price to continue to go up. We want the price to continue to close up, but we don't get that. So notice what happened during this time period. At 0100, we noticed that, boom, we went up here and we came back down here at 0100, and we closed bearish. If we were to move this, you notice that we have a wick at the top and we have a wick at the bottom. So there's only one thing that we could conclude, seeing that this was an area, even though price was broken, price came back down here. The only thing that we could conclude after this time, going to the 0500 candle, is that we want to see an illusion, right? We want to see the price go up, and then we want to see this wick fill and then come back down to this area right here. Okay, so let's notice how this works out. So you notice over here, price came back up here, price came down here, so we don't have a trade because it never filled this. And so we're now at 0900, and we never got the confirmation that we wanted. In this situation, in this scenario, we don't have a trade. Okay, in this situation, we don't have a trade. We got the illusion, but this area right here, we didn't get the wick fill for the price to continue down. So we have two scenarios. One scenario where we didn't get an illusion per se and price continued on down. That's more of an aggressive. And then this one here, we just don't have a trade. So let's move on and see what's going on over here. So here we go to 0-100. So this right here would be what we consider an ideal situation. Okay, so 0-100, we have this candle over here, right? So let me what's the best thing for me to do? Do I want to circle this? Yeah, let me just circle this area right here. Okay, so right over here. So we have an ideal situation here. Now why do I say that? So we have where the price is going down, going down, going down. We know that this area right here is a heavy what? Support area. That's why we draw these zones. This is a heavy support area. So we're anticipating, even though the price broke this, we're anticipating the price to continue on up. See, we're not going to be affected by this fake out because we are already anticipating this area to be a danger zone. We're anticipating the price to bounce off of this and go back up here. So the 2100 candle was our investigation candle. 0-100, we noticed that the price started to dance around this area and it bounced up and came back up here. So now let's notice this here on the 0-100 area on the 30-minute time frame. So the 26th of January, 0-100. 26th of January, 26th of Jan. Okay, over here, 26th of January, 0-100. Okay, right over here, 26th of January, 0-100. So notice this is a danger zone. This is our little area that we consider to be a dangerous area. Personally, because I know that this is a dangerous area, I'm not going to chance taking a sell down here. We never sell from the bottom, right? We're not going to take a chance taking a sell down there. So what do we want to do? We want to wait. So just allow it to play out. Now we know that 0-500 is our next area of interest on the 4-hour time frame, because remember, it's a 2100 candle, 0-100 candle, 0-500 candle. So we're just standing down during this time period. We're just standing down and we're just waiting for 0-500. So we want the story to happen. Oh, look, boom, the price came back up into the zone. So now we're waiting to see if price is going to respect it. Okay, so 0-500 candle, what are we waiting for? This is an area where it's supposed to reject and bounce all the way back up. We want price to go into this area, and then we want price to come back up and fill the wick. Okay, so let's go to the 4-hour time frame and let's notice where our wick fill is supposed to be. The 4-hour time frame, and let's notice where our wick fill is supposed to be. So here we go. 0-100. Our wick fill area is supposed to be right here. Our wick fill area is supposed to be right here. So we want to see a rejection at 0-500, and we want to see price come around here, and we're going to get interested. So now let's go to the 30-minute time frame again. 30-minute time frame again, right over here where we're supposed to get interested. And here we go. This is what we call the perfect execution. Okay, 0-500, price comes up here, price goes down here, and then notice what happened. It respects our zone, it fills our wick, we enter the trade, and we're going to trade from up to this level onward. So this is the area that we're interested in. So let's just say we have a long position, and we're going to go from here. Our stop is, so this right here is the 0-500 candle, right over here, 0-500 candle that we're interested in. So right down here would be where the stop would be. And again, you're using proper risk management. Right here is where our stop would be, and we're going to be interested in going all the way up here. But we know that it's highly unlikely that the price may go all the way up here. So what do? We continue to move up and we secure positions. Okay, sorry, my stop loss is supposed to be under here because I'm entering in this area here. So if I notice that the price dips back down here to this area, then I'll be out the trade. So my stop loss would be under this area right around here. Okay, if you want to have a healthier stop loss, put it down here. But for me, if I notice the price is coming down here, that means that momentum is not on my side, and that means that the price more than likely will dance around this zone before taking off. I don't like to see drawdown, so that's the reason why I'm entering the trade right over here. So I'm entering the trade in this area here. So now the question is, okay, when do I start taking profit out of the trade? Well, here's what I do. I look again for these areas. So this is the area I'm interested in. And so now here we go. We have an area over here. We have an area. Let me go ahead and show you guys like this. We have an area over here, which is where you can start to secure positions right over here. That's one area. And then we have this area over here where we can start to secure positions, which is right over here. And then we have this area right over here where we can start to secure positions, which is right over here. So right over here, we can start to secure positions. And then finally, right over here is where we can start to secure positions. Now again, I'm sorry, I'm on the wrong tool. So right over here is where we can start to secure positions. Okay, so if we want to, we can extend this over here to the right and go ahead and extend this over here to the right. Okay, so here we go. So we're here. Oh, and this one, we can extend it over here to the right. Okay, so here we go. So as price moves up and moves up and moves up and moves up on the 30-minute time frame, so we go up here and we're up over here. And in this area right here is where we can start to go ahead and start to secure. So we're here and we go over here. And so right now we're up about maybe, so we're up 10 pips. So let's just say with the spread, we're up like 8 pips. So from this area, we're going to be interested in starting to secure our positions. Now, one thing that happens to a lot of persons is they're securing their positions in this area here. But what happened is they notice that once they move their stop loss all the way up here, they normally get spiked out, right? They normally get spiked out. So they say, well, how do I avoid this happening? Well, here's how you can avoid it happening. What I like to do is, knowing that this is the area where I want to secure my position on the 30-minute time frame, you don't want the candle to go below the previous candle. Okay, you don't want the candle to go below this here, this previous candle. So if you were to enter the trade into this area right here and you're up at least 1 or 2 pips, more often than not, you're going to be at break even. Okay, so if the spread was about 2, or maybe like for me the spread is 1, so once I'm up 1 pip, I'm already at break even. And so you want to move your stop loss here. So move your stop loss here, and then even though the price is up here, move your stop loss here. And then if price continue to go on, right? So it came here, it went down here, and price went up. Now you want to move your stop loss. So from your stop loss was here, now you can go ahead and take your stop loss and then put your stop loss here in this area right here. Okay, I hope that makes sense. You can now go ahead and move your stop loss. Let me use another tool. From here, and then you could go ahead, wait for this candle to close. This candle now opens. You're willing to take a break-even trade. It never hits it, and it goes up. And that was one way that I used to get stopped all the time doing this. And I'm like, wait a minute, the price never really goes below the second candle because we have so much momentum behind us. And as price continue to go up and go up and go up and go up and go up, then you can move it here to this level. Okay, and then once that happens, as price continue to go up and go up and go up and go up, then you could go ahead and wait for this candle to close, and as price go up, then you want to go ahead and move it over here to this level. So the only time that you would ever, and this is important, the only time that you would ever have your stop loss by below the previous candle would be if you just entered the trade. Okay, this would be the only time if you just entered the trade. Anything outside of that, you move it up to the levels. Okay, because now you already have too much profit to lose. Okay, you can hit break even at just being up 6 pips. Okay, fine. But when you enter your trade here and you're up 10 pips After this happened, you're up 10 pips, and then you continue to go on and you're around 20 pips. No, you need to start securing it. Okay, you just go ahead and start to move your stops up and up and up and up and up. Okay, so that's how I use the 30-minute time frame for entry. You got some persons that may use the 15-minute time frame for entry, but for me, I like to use the 30-minute time frame. So I go from the weekly with the analysis to the 4-hour with the analysis to the 30-minute with the analysis. And then this is how I go ahead and enter my trades. And so once I put my stop loss in and I see that the price never goes here, I just let the trade run. Just keep letting it run and letting it run and letting it run and letting it run for maximum profits, and then continue to move your stop loss up so that you don't give anything back to the market. So even if it knocks you out of the trade, at least you would have, been up a decent amount of pips. And plus, you never had drawdown. Okay, you never had drawdown. That's extremely important. I know a lot of you are interested in getting funded from places like FTMO and stuff. They kind of, I don't want to say penalize you, but they deduct from your drawdown. So that was the reason why I even came up with this method, to help persons to avoid getting drawdown. Okay, so I hope this video was useful. And so in the next video, I'm going to show you guys how to take everything from the beginning, from fundamentals, hitting up the chart, doing our analysis, drawing our midpoints, going down to the 30-minute time frame, and where we're interested in entering the trade. So I'll see you guys in the next video.